All right, welcome back to the South Florida Mortgage Report. I'm your hat dude wearing mortgage guy, Billy May. As always, joined with Capital Partners Mortgage President Craig A. Garcia. And we're honored to have a special guest here with us this morning. It is State House Representative Chip LaMarca, District 100 Republican. He represents Eastern Broward County. He is one of the most highly respected political figures in South Florida. This is his last term in the State House. I believe he served about 7 years now. His term expires 2026. Prior to that, Chip was a Broward County Commissioner for 8 years. And then prior to that, back in the 2000s, he was actually started out his career in politics as a city commissioner for the city of Lighthouse Point. Chip's a great guy. We're really lucky to have you on. You're a local guy, too. And in Chip, our podcast, we talk about issues that affect the real estate industry, the mortgage industry, et cetera, et cetera. And one of the hot topics right now is this waiving of property taxes. But we'll talk about that. We'll talk about condos and a lot of other stuff that you like to talk about. We just love having you on. Thanks for coming on board this morning, Chip.
Thanks for having me, Bill, and great to meet you, Craig.
Yeah, so pleasure. Absolutely. So let's start with the property tax issue, Chip. We keep reading about this. How did this start? What's the origin of this waiving of possible property taxes?
Well, so I want to be careful on how we label it waiving or it's really reform.
Okay.
Because I don't know how far we're going to be able to get with it. But look, it's an interesting time in the Florida legislature right now. And, I'll phrase it like this. If the governor made a statement, he wanted to get rid of property taxes for homestead, property tax homeowners. His statement was you never really own your home if you paid it off and you still have property taxes to pay. I agree with him on that premise, but I also agree that there are ways that we can make significant reforms. And I finally would say that the government should not be able to take your home from you based on your property taxes if you're in a tough financial situation. I don't think if you don't owe anything else on your house, your property taxes should be a means to claw your home from you. So I think I'm very passionate about that. But as we've been going around talking to constituents, and as you said, Bill, my district goes from Deerfield Beach down to Port Everglades along the coast. So I have coastal communities of Deerfield Beach, Hillsborough Beach, Lighthouse Point, Pompano Beach, Sea Ranch Lakes, Lauderdale by the Sea, and City of Fort Lauderdale, the county seat. So in talking to people, it's an interesting dynamic because the papers have been saying, well, how can you do this? And look, ultimately, we can definitely make reform. We've done it in the past. We did portability, homesteaded rates. We could add an existing homestead exemption. So a lot of these kind of get to that part of the heart of the situation where I am, interested to kind of see how different people react on these things. As I've gone up to Tallahassee we're in that committee week process, which is these intermittent weeks from October, November, December, when we kind of prepare, chair a committee on economic infrastructure, which has a lot of different things under that umbrella. And so we're doing informative panels and we're starting to hear bills, but we're not in what's called the legislative session yet. That starts in January 13th. So we're not really voting on bills and we haven't gone to the House floor yet. So none of these can become a bill yet. And we'll get into that. But it's interesting, the debate right now, and I'm not a political person always, but I will just say my observations are there's a shell game going on right now, and the Democrat members are saying nobody cares about property taxes. What they care about is property insurance. And while they are correct, that's half the equation. Have significantly made significant reforms and significantly shown that limiting frivolous lawsuits and other things around property insurance has already brought rates down. We've had, I can't give you the exact number because it grows every day, but we've had a lot of companies come to Florida, and the existing companies that are already here and stayed here have submitted what are called reduced claim or rate filing. So every year when they say, hey, this is the basis what we're going to charge Bill and Craig and Chip on their property insurance, that number has come down as low as 10-12%. Some are the same. A few of them are probably a point or two higher than they were last year. But that's what's called free market. You guys in the mortgage business, same thing. I mean, you're going to try to find the best rate for somebody. So people should really shop their insurance. But let's leave that over here and say that my friends across the aisle are correct. That's still an important issue, but we're seeing that trend go down.
No,
We're also
yeah.
seeing a significant decrease in automotive insurance. That's down. Progressive and State Farm have already. Progressive's giving $1 billion back to Florida, in rate reductions. That's with a B, $1 billion, significant number. And then State Farm, for example, is reducing by 10% last year, and then 10% next year. So what's interesting is that's all important, the insurance side of things, but people are still asking for relief in property taxes. Because it all goes in. If you have your principal, interest, taxes, and insurance, it's all in there, right? Your taxes and insurance are part of that, so
Oh,
it's all
right.
part of
Yeah.
the affordability.
A-
Um,
absolutely.
yeah, so we're seeing that, but we're in the conversation of there's a committee that was put together. It's the property tax committee. I'm not on it, but have watched the meetings. It's a select committee on property taxes. I have watched the meetings, and I can, as you want, go through the three different types of property tax relief, if you will. If you want me to kind
Well,
of.
I think the one key thing is I know a lot of people reached out to me too because earlier this week, I think it was on Monday, the Sun Sentinel had a big feature article. I quoted you in there as well, but
Mhm.
the whole structure of the article was focused on Broward County property appraiser Marty Kerr did some sort of study, and they're trying to say, okay, listen, if you take away this revenue from these counties and cities, how are you going to make that up? And at least from what I've seen, it seems like I've had people ask me about it too, and especially the realtors in my office like if you do take away the property taxes, are you going to increase sales tax? And that's kind of one of the things that I've
Mhm.
heard.
So, look, the reality is, and I'll give you an interesting number of taxes, right? What cities, counties, and the state collect. Local government, so ad valorem homesteaded taxes, since 2020 to 2024. 2020, the number was $11.8 billion. Okay, statewide, $11.8 billion was collected on homesteaded taxes. Now, be very careful. All of these conversations that we're going to have remove education. We're not touching the education line item budget in your taxes, which ultimately means you're still going to have a tax bill. But so without talking about education, everything else in that ad valorem was $11.8 billion in 2020, 17.5 billion today. 4 years, 5 years, five calendar years, it's gone up $6 billion. So the conversation really needs to circle around. I don't want to get into federal issues, but I kind of make the comparison that people are saying, arguing about Medicaid funding and ACA, just different federal funding. Well, there was stimulus money put in during COVID for a lot of things. So this increase probably has a lot to do with, all right, well, we're getting federal money for different funds, ARPA funds, ARA, just different programs. But we kind of have to tighten our belts. And as a former city and county commissioner, I can tell you, um, we can we can do that. We can tighten our belts. So as I go through the three different types of property tax reform, you'll see one is a complete categorical elimination, so just wiping it out. The next one are exemptions, additional exemptions, as we've had in the past with homestead exemptions, and the third one is are labeled under reforms. And there's two or three under each one. If you want, I can just kind of do the 10,000 foot view and we talk about it. And I can give you my opinion on what I think would work the best. But when we get to the end, I'm going to give you the spoiler alert. We have to talk about the process of passing legislation in Tallahassee and why it's important to have the Senate on board. And this is a rare case where it's not necessarily required to have the governor approve the actual language. I'm not saying that that's what I want or don't want. I'm just saying that's the way this process works. In the first one, the categorical eliminations. There's now I'm going to read these bill numbers. They're called HJRs, House Joint Resolutions. But what it means by joint is we need to have the Senate have a similar resolution, and then it would go on the ballot as a ballot referendum. You'd be able to vote yes or no on it. The goal of the tax reform committee is to have all of these. They just voted this in last, I believe it was last Friday. All of these would ultimately end up on the ballot, which to me would cause some confusion and possibly some conflict. But it also gives each and every one of these supporters of these bills the opportunity to kind of market and campaign to the taxpayers and voters of what should or shouldn't pass. So the first one under categorical eliminations is HJR 201 by Representative Kevin Steele, and that's the elimination of non-school property tax for homesteads. It exempts the entire assessed value of a homestead property from non-school taxation. For example, $500,000 home that's assessed, the Save Our Homes value, would pay no county or city property taxes. If they currently pay $5,000 in school taxes, that amount would drop. Non-school taxes, that amount would drop to zero. The second one is by Representative Monique Miller. That's House Joint Resolution 203. This one is a phased-out elimination of non-school property taxes, similar to the last bill, but goes over a period of time, increases the second homestead exemption by $100,000 per year every year until a full exemption of school taxes applies in year 11. So this would ultimately go up to $1 million in value. In year 11, the full $500,000 value would be exempt. The homeowner would not pay taxes. I like that this kind of gives the cities and counties and other governments that rely on ad valorem, part of their budget is ad valorem. And to be clear, only part of the budget, about a third is ad valorem, 35% is ad valorem. There are other ways that people take tax dollars out of your pocket to fund the government. So don't be fooled by that. So this is a phased-in approach. The third one is a specific categorical elimination by Representative Juan Porras. It's House Joint Resolution 205, and it's the elimination of non-school property taxes for homesteaded persons age 65 or older. I love taking care of our seniors. What I would say on this is there are additional homestead exemptions, for seniors at lower income levels now. As you recall, probably a few years ago, we passed a bill that gave an additional exemption for seniors, and that's for low income seniors. So this would apply to anyone 65 years or older. People can, I serve a lot of seniors in my district. I see value in this, but I also see that a lot of times, if someone's not on a fixed income and they're not low income and they're not having problems with their bills, this would be kind of a giveaway. But obviously our seniors, we owe everything to the generation before us. Just want to make sure if we're doing something, there's a reason to do it. So those are the three elimination bills or joint resolutions. The second category, or what basically is kind of additional exemptions. We've seen this in the past. We've seen it for service disabled veterans can get 100% exemption if they're 100% service disabled. The senior exemption is an additional exemption. The additional $25,000 homestead exemptions we all have was an additional exemption. So similar to that, Representative Shane Abbott, House Joint Resolution 207. And people can look these up, by the way, if they go to flhouse.gov. You can look up under bills. You can put these numbers in that I'm giving you. So Rep. Abbott's bill is an assessed home value homestead exemption of non-school property taxes, and it creates a 25% property tax exemption for homesteads calculated on the value of the property after the two existing $25,000 exemptions are applied. So you take your existing, bill, your existing tax bill, and your trim notice, and you look at it after your two $25,000 exemptions are applied. You take the existing number there, and you take a 25% discount on your property tax, your base property tax amount after the 225s, and then you leave the school tax on there. So just on your city, county, anything but the schools, and that would be a 25% discount on your property taxes. And that it's a hit, right? It's 25%. So the locals will probably say, well, that's a hit of 25% on part of what we bring money into, have parks, libraries, and all that, and provide services. But it's much more predictable. So that $500,000 house minus the $50,000 exemptions is $450,000. Proposal removes an additional 25%, so it's another $112.5 thousand. So you would ultimately be paying tax on $337,500 outside of the school taxes. So to me, that seems pretty reasonable. It's predictable. The cities and the counties would understand what it means. And then in that same category of additional exemptions, Representative Demi Busada from Miami, she has a House Joint Resolution 209 that creates an additional $100,000 non-school exempted homestead for any homestead that's covered by comprehensive multi-peril property insurance policy. So if you have full insurance on your house, this would give you another $100,000 exemption. theoretically probably giving you enough to pay your insurance. If that makes sense, or a piece of it, I guess. Depends where you are, right? If you're in East Coastal Broward County, probably not. But so that would give you some additional savings on the property. Now, the three other ones, and then we can kind of chat about these, and we can go to other subjects. The three other ones are under the kind of category of reforms, just reforming how we do it. House Joint Resolution 211 by Representative Toby Overdorf, who's the chair of this property tax committee, is the accrued Save Our Homes property tax benefit for non-school property tax. What does all that mean? You remember in 2006, effective in 07, we had the property tax portability. So, Bill, if you
Yeah,
decided to move
that was a big win.
from Tamarack to Coral Springs, or maybe you move back over here where you grew up, I get you to move back over here. Whatever happens, if you're going up in value, you can bring a piece. You kind of I call it almost the health savings account for property, taxes. You're kind of banking that money on credit that you've been paying difference. So the difference of your slower rising 3% a year Save Our Homes value versus the your assessed value or just value, you're able to claim that, bring it with you to another property, reduce that property by that amount. But typically, that's in current form. That's only when you're going up. If you decided, hey, you know what, I'm going to retire. I've done my part. I'm going to retire. I'm going to get a townhouse or a condo. And then you sold your house for $1 million. You want to buy a condo for less, say $500,000. You don't really realize, you don't genuinely realize that whole savings account, if you will, in portability. What this would do is remove the existing portability limitation of $500,000 under Save Our Homes. So if you had, to be clear, if you had a previous home that had a $1.2 million market value but was taxed at $600,000, you have a $600,000 benefit. If you want to go to a $500,000 condo, as we mentioned, you can transfer the entire $600 benefit to the new home. You're not going to get a rebate from Marty Care or the county, but you basically would wipe out your property taxes with the exemption of school taxes. So you basically have 100%. If you had more in that portability bank, you'd actually be able to go down. And what I like about this particular plan is it says, Bill, you've been a good steward of and good community partner for us. You've been paying into taxes. Now, if you want to go retire and get a place that's smaller, lower cost, and you've got that money in your portability account, if you will, there's not an actual portability account, but they keep track of it. So
Right.
those dollars would wipe out your taxes. So that says, hey, you've done well. Here's your reward for investing in us as a
I
city
think
and a county.
that's a great idea. And Craig and I, we originated loans back in the 2000s, and I remember when that was passed, we thought it was fantastic, and it's been a huge win. I personally used it. I mean, I sold a home years ago in Tamarack, moved to Coral Springs, didn't take a big of a hit, and I have clients that call me up that want to move, and just like you're talking about, Chip, hey, we want to downsize, or we want to upsize, whatever, and I go to the Broward County Property Appraiser website, and they have a portability calculator on there, and it's been a big win. I think if that could get expanded, that would be a huge win, I think.
Yeah, if you go to, just as you mentioned, if you go to BCPA, Broward County Property Appraiser.net, Marty Care has a excellent website there.
Yeah.
He's done some work to modify it, make it easy to read, and like you said, the portability calculators, so you can actually figure out, when you're buying a new home and you want to see if what your portability does, it'll show you right there, based on what that current home is in taxes and what you're selling, what your savings would be. And then there's two others in this category. One is by Representative Griffiths from Panhandle. His is House Joint Resolution 213-213. And it's a modification of limits on property assessment increases. So this one is an interesting one. It changes the existing assessment increase limitation on homestead and non-homestead properties, from the lower of 3% of the increase in CPI each year to 3% over any given 3-year period. So basically, it averages that dollar amount over 3 years. Example would be a $500,000 home's taxable value could currently rise 3% per year. And this plan would limit that increase to 3% total over any 3-year period, capping the growth at $15,000. It doesn't just average it. It caps it at the 3-year would be 1 year's tax increase. That makes sense. So the growth would only be $15,000, and it wouldn't apply to the 3rd year. So it's kind of like saying, hey, you better stay in this, you better stay in the house if you want to get the savings. And then on the non-homesteaded, there's currently a 10% annual cap on what we can charge for retail property, office buildings, any non-homesteaded properties or second homes. This would actually move it from 10 to 15% over any given 3-year period. But that would, so at 10, give you an example, a commercial rental property or second home assessed at $500,000 can increase the taxable value of 10% per year, which is potentially $50,000, right? Of assessed value, not taxes, but your millage rates would apply to now not 500 in year 2, but 550, and then 600, and then 10% of that would be the next year would be 55,000 more. The next year it would be 60,000 more. So under this proposal, the limit would instead be 15% over any 3-year period, capping growth at 75,000, and again would be applied in the 3rd year. So we're looking out for homestead and non-homesteaded properties, business properties, people who have a second home in Florida, snowbirds, and kind of giving them more predictability, right? So you can see what your investment's going to be over 3 years. If you rent that house out, you'll have the ability to figure out what your rent should be and things like that. So that one's a interesting proposal. And then finally, the last one is by Representative John Albert, is HB 215. And it's called ad valorem taxation. This bill makes 2 significant property tax changes. It allows single homesteaders who marry each other to combine accrued Save Our Homes benefits to their newly shared homestead up to $5,000. So if 2 homestead homeowners have a $250,000 in Save Our Homes benefits back on that portability, they can now combine them so they have a $500,000 max total portability benefit in their new shared home. So all of these require a local vote. I'm sorry, that one there requires a local governing body to have a 2/3 vote in order to increase any millage rate. Why that? I mean, I think that's kind of a cool one because it not only offers you that savings, for somebody who's been married 30 and a half years, kind of promotes, marriage. So there you go.
You gotta update your dating profile on your dating website to say,
looking for someone with a Save Our Homes value.
Yeah.
right. Have homestead, we'll travel.
Yeah.
Swipe up if you have a good homestead Save Our Homes value.
Too funny. Chip, can I ask you
something?
What's
out there.
So Chip, let me ask you something. So I've got this impression, and from just trying to do a little bit of research on this, like for any of these things that get on the ballot to pass, it requires a pretty big, it's like 60%. Is it 60% that it require to pass? And and can you speak to the idea? I mean, having that many things competing against each other probably is going to make it hard for anyone to get that kind of vote. You think?
Can I? All right. So take off my legislator hat. I don't serve in the legislature. I'm just going to give you my kind of my prognosticated opinion. I'm just going to kind of call what I think might happen. We have to, as I mentioned before, the spoiler alert was we have to have a Senate bill match each one of these. Right now, there might be one bill filed in the Senate that has some of these elements, but not all of them. So we have to go through that matchmaking in the policy side. We have a House and a Senate. We have to have a companion for that before it can get to the ballot. I don't know, right? This is just me making assumptions and guesses. I don't know that we get 7 ideas to the ballot. I think, and sometimes, look, I'm a member of the House. We're the people's house. We're a little more rambunctious body. The 40 senator, we're 120 members. The 40 senators have sometimes been called, 40 independent Somali warlords. They have a little more power. They have 300% the power we have, supposedly. But we take them on every time we get a chance. But having said that, there's a process in government. I'm being serious here. There's a moderating factor, and that's called the Senate, right? So at some point, we'll find the best bills here that match up with those. That will go on the ballot. We could have 7. We could have 1. We could have 2, 3, 4. I would say in the categoricals, you look at the complete elimination, the Florida Association of Counties and Florida Association of Cities, Florida League of Cities, their hair is on fire. They're absolutely losing it. And I used to be members of both of those. And I can tell you the immediate elimination is probably going to be too much for anyone to handle. This is just me saying, hey, what do I think is going to happen? I mean, I think the phased out elimination makes sense. It says, hey, local governments, you need to tighten your belt. I mean, this is just us being very, very honest with the situation. If you have a nonprofit, my wife ran a nonprofit for 4 years. Two former NFL and FSU and Blanchie high school football players started. They do great things for middle school kids. But that organization, I'll give you an example, just like many, many organizations, it could be anything from Special Olympics to, housing affordability issues and everything in between, education. A lot of those organizations will go to the Children's Services Council, United Way, Community Foundation of Broward, City of Pompano Beach gives out grants. The sheriff has a law enforcement trust fund grants. The county gives out grants in different things like cultural arts. So, plus you can go to the state and ask for money. A lot of these levels of government have become turnkey. That if the other ones didn't exist, they want to provide all those services. And but for 3 different municipalities in Broward, none of them have libraries. The county handles the library system. So what I'm getting at is I think there's places, if we don't eliminate services and maybe reduce it to a degree, or maybe we don't even reduce services, but we just reorganize and realign how people are being served. And certainly the least among us who need the help, I'm all for that. I'm a compassionate conservative. I think we should go out and take care of those who need our help and stand them up and allow them to get back into society and expect that when they can do that, they'll do that. But having said that, I think there's areas where we can tighten our belts in city and county government and, quite honestly, state government too.
This has been a great deep dive, and I think just the average layperson who just reads things online are thinking, "Oh, they're going to waive property taxes, and the cities and counties are going to be broke, or they're not going to be able to pay police and fire." But I mean, each of those proposals you just went through, that's not really the case. And like you said, tax reform, and it'll be interesting to see. And I've talked before, and I've said to Craig, and I asked earlier, like, how did this start? And I think like you said, the governor Ron
And the
DeSantis kind
governor
of
said
brought this
something
about.
pretty, yeah.
You know what I mean? And coincidentally, he's term limited out next year. And I think he wants to do something, make a big bang in 2026 and maybe keep his momentum going for maybe a possible presidential run nationally in 2028. I don't know. That's what I read or stuff. I don't know if that's true or not, but that's kind of one of the hot buttons I think that he's kind of pushing on to kind of keep himself relevant. You know what I mean? From the average person who watches politics,
Yeah. The interesting question I get from everybody is, are you really going to get rid of property taxes? And I can't look at them with a straight face and say yes, but I also can't say no, right?
Right.
So I said, look, we're looking at everything. We're going to give it to you. At the end of the day, and Craig brought up the point, at the end of the day, they're going to have something on that ballot. And I think this will drive turnout more than any other election, any other gubernatorial election in the past, because it's not presidential. And people will come out to vote, and they'll say, look, I either want or don't want property tax relief, right? I don't know anybody that's going to say I don't want it. Even if the local governments say, oh, this is going to wipe out X, Y, or Z, I think both sides, it's incumbent upon both sides to really make their case, right? I have never been one for defunding first responders, police, fire, or anything else, or reducing costs. But I've always asked them to tighten their belt. I said, tell me what you need, not what you want. I know that, like, I have a request into the state for the city of Fort Lauderdale for a new fireboat. Not because they want it, because they want a fast boat and they want to cruise on the waterways, but because they've had multiple structure fires and boat fires where their antiquated fireboat needs updating. And by the way, the city's paying 2/3 of the freight of that request. But so where the resources are needed, I want to make sure we do that. What concerns me as a taxpayer and as a supporter of first responders is the talking points for all of these bills so far have been that we will hold not just the cost to schools and education, but we will hold law enforcement. We'll exempt them from any of this. They will not be affected. I haven't seen where you can say that they won't be affected if you're reducing the overall number, and they shouldn't be, by the way. But so should not firefighters and EMS and paramedics, right? I think those are all, you dial 911 because you're having a heart attack or because someone's got you at gunpoint, or someone's trying to break into your house. You tell them what the situation is. They may send both, right? You may be having a heart attack because you got shot. The police need to be there to take care of the perpetrator or the person who shot you, and find them so they don't hurt anybody else. And by the way, your health and safety is as paramount as finding that person, because that's your life. So I think when we hear that, it's going to be incumbent upon these are going to be two very well funded and very well thought out ad campaigns on why you should vote or not vote for these. I would say similar last go around to Amendment 4 and was it 3 and 4, the recreational cannabis or recreational marijuana, and removing any restrictions on abortion. But I think it's going to be more like, obviously, go back to 2006 when the realtors and the mortgage industry and all kinds of other financial industries got involved in, hey, portability is a great idea. I think you're going to see a lot of the business groups, chambers, and other folks talking about why this property tax reform is important. And you'll see other people saying, well, if you do this, I won't be able to eat. So you'll see it all in the gamut, but I think It's going to be an important issue to watch.
Well, hopefully the process will narrow it down, and there won't be so many options that nothing happens. You know what I mean? So we can hope.
Yeah, I mean, I feel like if we get more than one, and theoretically if we get 7, something should happen, right? I mean, I don't know anybody's going to go through 7 different plans to lower your taxes and vote no on all of them. But to your point, Craig, it's a high threshold, because anything dealing with a fiscal tax increase or decrease has to have 60% of the vote now instead of just 50 plus 1. So.
Yeah, it would seem like the more options, it'd just be hard to get there, just because everybody's got their own view on it.
Yeah. So interesting fact: before I got to the legislature, the ballot referendum that was put out to say financial issues should be fiscal issues should be voted on by 60%. It passed by like 54%. So the very issue that needed to pass by 50 plus 1 passed by 54, but it was saying in the future this has to pass by 60. So it's an interesting process.
That is interesting. Yeah.
Yeah.
Well, that's great, and Chip, that's very. I really appreciate you going through the different things that are getting talked about right now, and kind of the process. It still needs to happen before we get to the point where anybody's voting on anything.
Mm-hmm.
I guess with the remainder of our time, can you just give us your, what's being talked about in terms of, up in your circles regarding the condo situation, in Florida, and progress that's being made there, and what may still need to happen? What are your thoughts there?
So let me just kind of address what's happened in the past, and then like what people are looking at. So for condos, for many, many years, there was a bill called Emergency Life Safety Systems, ELSS, and that was your fire sprinklers, other types of systems that would take your common areas, your elevator shafts, your stairwells, and entrances to your condos, and kind of call it a high rise, and make them safe by having some way to put out a fire if one started or emergency like that. That can got kicked down the road for many, many years. It's kind of like you go to your condo folks, and I represent, for example, Pompano, Deerfield, and the Galt Mile, which has a lot of condos, and they say, well, we don't want this. So what do you mean you don't want to be safe? No, well, we're not worried about it. I had one constituent tell me one time, at some point you got to go. I don't really want the assessment. It's like, come on. So I don't make light of life and safety, but we find that bill was finally put back in. It was going to be postponed again, and Governor Rick Scott in 2016, I believe, observed that there was a big structure fire in England, and vetoed the bill. So it's ongoing, and no one's really wanted to touch it. It got delayed a bit. I think 2027 is like the completion date. But it's people are understanding and going through with that. They're also dealing with insurance rates and everything else. So when the Surfside, the Champlain Towers situation happened in Surfside, it was a tragedy. I mean, there's no other way to say it. It was a tragedy. 100 people died. I mean, they're sleeping in their beds. Grandparents, grandchildren, families. It was a mix of everybody. People from this country, other countries. And living the American dream, the golden years, living in the condo, and the damn thing comes down, and they die. So it's a tragic situation. I was appointed to a committee, local committee on a task force with a couple senators, myself and another, or actually one senator, myself, county commissioner, and then some industry professionals from real estate and structural engineer and some some other folks in construction. And what was interesting is we we found out we didn't know what happened yet. What the best we have right now to the kind of the research and the forensic evidence from what was going on. A couple things happened. One is the building was more than likely not built like we would build a building today. I mean, think it was 1980, 81. What was going on? I mean, we're roughly all the same age. You remember the movie, The Cocaine Cowboys? I mean, there was a lot of people bearing a lot of money in banks, and a lot of construction was happening very quickly, and some of it was shoddy, not to the best. So you've got maybe there were corners cut in the process of building the building. Excuse me. Maybe it wasn't maintained properly, right? We know they had a long list of items that were deferred maintenance and deferred upgrades, some exposed steel rebar in the pilings in the garage, and then it just wasn't the work wasn't done. All that aside, the building collapsed. Tragic situation for the countless lives lost. So what we do in Tallahassee is we usually do is things that are more reactionary than proactive. So in being reactive, we had a bill that the first year, and it was run by my Speaker of the House in my class, Danny Perez, along with Senator Jennifer Bradley from Gulf County, which is up by Jacksonville. I'm sorry, Clay County. And the bill was pretty strenuous, and it was pretty strenuous, and said you must have fully funded reserves by the next calendar year. You must do this, and do an inspection of all your structural structural items. We made a list of what needed to be done. We then said you must have a structural engineer do all this work. I kind of said, look, guys, I think it's important we promote safety. We do things like this, but I don't think there's enough structural engineers out there. And a general contractor can do the first view of this concrete looks like there's a problem. Maybe then we call in a structural engineer to do some concrete and steel testing and some, structural integrity testing. So year one freaked everybody out in the condo residential world. Sky's falling, insurance, ELSS, you're going to kill us. No pun intended, and not meant to be that, but financially, there's like, well, you're going to get us out of our condo, and we might as well have a tragic situation. I said, well, calm down. Well, we always have what's called the glitch bill, and in year two, the glitch bill spread out gave a glide path and spread out when they would have to have fully funded reserves. Gave them more time to get their inspections done, but said no, but you must do it by this point. Most of them got their inspections done. Most of them figured out how to put the funding in, and they were only specific areas. But then we did it so that they didn't have to fund every single one of them. If your roof had a 5-year timeline on it, we had to do it, and it was $1 million, you could spread it out to $200,000 a year. If there's 200 people in the building, $1,000 a year. All right, tragedy avoided. You can figure out how to make those numbers work. I can be honest, and I'm critical sometimes of things that we put out, whether it's a Republican bill or a Democrat bill or a governor's priority. We still made this bill cover condominium associations of 3 habitable. We moved it from 3 stories to 3 residential floors, so it could be a ground floor, parking, and then 3 floors. And I disagree with that. I'm not going to get in a fight with somebody who could sign my appropriations or not, or pass my bill or not. But the reality is where you guys work, and you've been all around Broward County. It's not just high rises on the beach that are being affected by the elements and other things. It's 3 and 4 and 5 and 6, 7 and 8 story condominium neighborhoods like Sunrise Lakes, Century Village, Margate, you name it. There's 3, 4, 5-story buildings everywhere. 35 years in the construction world. I'm not a structural engineer, but I can tell you the likelihood of a 3 or 4 or 5-story building collapsing is very, very low. The likelihood of failure in a balcony and the balcony collapses and someone's on it, I can't say that won't happen, but the idea that we would cover high rises and then loop in everything else that's 4 stories and above up to that point, I believe we should and could make some changes there, because there are people on much tighter budgets, maybe living in Sunrise Lakes than they are living, on Fort Lauderdale Beach in a high rise, So I think there's some things we can do there, but the condo bill, I'd say the general consensus is people are, the overall concern for the market collapsing and all that is probably subsided for now. And I think, the condo market is pretty strong. And I mean, we're seeing brand new ones built. We're seeing 2, 3, 4-story buildings demolished and new ones going up in Pompano on the beach. And so we're seeing investment in development. So, the condo bill was one thing. And then I'll end with this. One of the most important programs that I've been involved with personally and sponsored every year was something called the My Safe Florida Home Program. And we can talk more about it, why that matters for homeowners, but it also matters for condo owners, because the author of the bill for the condo work moving forward was a woman by the name of Representative Vicki Lopez from Miami. She's, I think, the only person in the legislature that has more condos in her district than me. And Vicki ran that bill, and we put $30 million into a pilot program for condos. It went in not days, weeks, or months. It went in minutes last year. We did it again this year. My Gulf Ocean Mile, Pompano or Deerfield Beach folks got an email from me. Hey, this is going to go online. It's going to go live on Friday at noon or whatever it was. I think 2 or 3 people got their paperwork in. It was pretty cumbersome to the fact that they had to get a full vote of the condo board and other things. So we lowered the threshold and we got some in there, and that would give them $175,000 in grant money from the state for roofs, windows, doors, things like that. Not a ton of money, but hey, everything helps. So I think when we say we want to put our money where our mouth is, I think as a state, we've got to entice people to put some skin in the game. And so all these grant programs are typically 2-to-1 state, 200%, homeowner or a condo association 100%. So it's usually up to, like, the residential version of that is a $10,000 match for $5,000 if you're going to invest in windows, doors, roofs, things like that. That'll make your home more resilient and hardened against hurricanes. And ultimately, the goal is to lower your property insurance.
Yeah, that's been a wonderful program. I've used it myself. Great program. I've highlighted it here in my real estate office, and I told my clients about it. Spectacular program, and thank you for getting that happen, Chip. Really appreciate it. I know we're going to be closing out soon. Your time is very, very valuable, and I thank you for your time this morning. Something we do when we have guests on, Chip, is we want to get a little personal here too, Chip. Okay, so we got to about your personal. So I know, like Craig and I know you're an '80s music guy, and I do have an '80s music podcast. I have to have you on, by the way. So,
we have a house. We have a
what's
house
that?
rock band. We have a house rock band called the House of Rock. I'm playing
You
a little
do?
drum up in Tallahassee. We've done a few shows.
Really?
Yeah.
Interesting.
And you and other legislators are the players?
So it was founded by a guitarist / house member from Claremont, Florida, Lake County, a guy named Taylor Yarkowski. You can find it at houseofrock.live. We do 80s, 90s, rock to metal. So
Are you serious?
From Judas Priest down to Pat Benatar.
And you play up in Tallahassee?
We played at Bowden's a couple times. We've played at a couple opening events for Session. Those guys, I'm going to be out of town, but those guys are coming down to do an event in the Keys in Marathon or Alamorada, for Representative Jim Mooney, who's the representative down there, and they're doing it as a fundraiser for Representative Mooney.
That's really cool. I did not, all those years I was going to the FSU Tallahassee because both my daughters are Seminoles. I did not know that, so I learned something new about you. I knew you were into music. I knew you played some instruments.
It was way back in the day. So when they said you can still do it now, right? I'm like, can't play the guitar anymore, but I kind of half played some drums on about a half dozen songs. So
that's cool. That's
cool.
Are
we gonna do an 80s quiz?
Well, no, I was gonna ask you. Well, Craig is the one to ask him about some of my drums.
So as a drummer, so it's funny because one of my guilty pleasures, on YouTube, there's this channel called Drumeo. Have you ever heard of this? So these videos where they play a song for a famous drummer, and this drummer's never heard the song before, and then they just have to kind of do their best and come up with something while the song goes. I am obsessed with watching those videos. And I'm not even a drummer. So as a drummer,
who's your favorite
video?
What's
that?
Who's your favorite video
Of that series?
Yeah.
Probably the Chad Smith one. Yeah, it's pretty good.
100%. 100%.
Yeah.
I think I just, every time I watch him, I just feel better about everything, because he looks like Will Ferrell.
Yes.
He plays the drums like he's in Step Brothers.
Yeah.
And he just looks like, he looks like he's having a really,
does.
really, really good time.
Yeah, no, I just think
Powerful.
it's like watching somebody, sporting event, because they don't know, you don't know what's going to happen, and they just kind of,
Yeah.
make it up as they go along, and it's, I don't know, I think it's a pretty entertaining video series.
So interesting. By background, I didn't study political science. I would say no interest in politics, but I just kind of watched generically on TV growing up. On our 3 news stations that Bill and I had. With the cable box with the wire, you press the button. But when like CNN came out, I watched a little more news, and I just didn't really follow politics. My career path was going to be, I wanted to be an automotive designer. My guidance counselor at the time told me I should study mechanical engineering. I'm like, no, I think I should study like industrial design. At it was a school in Philadelphia, and then General Motors had a school. The automotive industry was it was 86. I graduated high school, the automotive industry was in the tank. It was awful. The cars were plastic. They had no horsepower. They were ugly. And I didn't. The other career path was symphonic percussion at Berkeley in Boston, and because I marched and did concert and jazz band in middle school and high school, and I looked at that and I was like, listen, that's a lot of fun, but like the likelihood of getting a job in music is probably not that great. I mean, it's like 1 in 1,000 or 1 in 100, and so I ended up following my dad's career path in construction and kind of the design space in there. So I still a little creative and a little bit of the building side, but you kind of often wonder, like, what if I gave the music thing a shot? But it's a lot of hard gigs and not a lot of money. I understand from anybody who's actually made it happen, but I think to your point, I think having technology now with like YouTube podcasts and Drumeo, and I mean what the Journey singer was found on YouTube. I mean, I'm not sure how they found Annika for Rush, but I'm definitely gonna go check her out. I'm definitely gonna see her a couple times.
She's gonna be good.
I mean, no Neil Peart, but
no,
it is.
No, she's gonna be awesome. Hey, thanks again, Chip, for your time. Really appreciate it, and great in the background on the drums and stuff too. Really appreciate your time, and we'd love to chat again with you soon. So, and good luck when you get back to the legislature next week.
Maybe when when we know what's going to be on the ballot, we can do like a refresher and really talk about the nuts and bolts of them.
That'd be amazing. Thanks so much, Chip.
Hey, thank you very much.
All right, Chip. Have a great Thanksgiving.
Take care. You too.
Craig, that was a great conversation with Representative Chip LaMarca. What a great guy.
He was incredible. I'm so glad that you were able to make the connection with him, that you had a connection with him and got him on. That was a lot of fun and very, very informative. I really enjoyed that.
Really was. I mean, all those explanations, the different types of, what could happen to property taxes, great stuff. So let's talk about kind of our market wrap up. It's only Wednesday. We're getting ready for the Thanksgiving. I got my cranberry colored shirt on. We don't have the Freddie Mac survey just yet, but mortgage rates been trending downwards the past 3 weeks. So that's pretty much where rates been heading. You're going to talk about a market update, and then I'm going to talk about a win-win. So what's going on in the market, Craig?
Yeah, and to your point, I mean, rates are best they've been all year in that lowest range of all year. So that's really great. So the news that just came out is that the loan limits. So every year, the Federal Housing Finance Agency, the people that run Fannie and Freddie, they look at at what's happening with home values, over the last year, and they say, hey, do we need to make an adjustment to the maximum loan limit before the loan becomes a jumbo loan, right? So the maximum limit that you can have the loan for and still get a Fannie or Freddie loan. So every year they look at it, and most years they are increasing the amount because home values continue to go up. So they've come out with the new loan limits for 2026. And there's been the increase this year was about 3.25% increase in values. So now the new loan limit for 2026 on a single family residence or a condo, a 1-unit property, is $832,750. So up from 806 and a half. And what I like to do when these numbers come out is I said, okay, this means with that, if you were a first-time buyer, right, which would enable you to put 3% down on a Fannie Mae or Freddie Mac property. You could buy an $858,500 home and put just 3% down, finance.
That's crazy.
That's pretty wild.
Think about it. Yeah.
Now that's for a first-time buyer, lets you do the 3% down. If you're a repeat buyer and you're buying a primary residence, you would be still looking at a $876,500 purchase price,
right,
with just 5% down. Still
right.
amazing.
Yep.
What a lot of people don't even realize is the numbers get even bigger. If you have a 2-unit property that you're buying as a primary residence, now you could potentially buy a 2-unit duplex for $1.1 million and change and put 5% down, live in one side, rent out the other side. A
Right.
3-unit property, you could pay about $1.3 million and put 5% down. And a 4-unit property, it's like 1.68 million and change with
Wow.
a 5% down payment. Now, obviously, you got to qualify, right?
Sure.
But the idea that those numbers are possible with that little down, a lot of people are very surprised to hear that. Even people who've been in the business a long time. Anyway, I always think it's interesting when we get those new loan limits to kind of, hey, this is how much you could buy with this minimal down payment. But yeah, no, so those, and what happens is when they release this, it is effective 2026, but we have investors every year. Investors will start honoring the new loan limits early. So chances are, if you're listening to this and it's before the first of the year, it's December, you want to get into a house before the end of the year so you can file for homestead, and you want to take advantage of these new limits, you'll be able to, which is the good news. So
Yeah,
anyway,
absolutely. When you mentioned we have investors, let's segue into that. So who are we really at Capital Partners Mortgage? We're a mortgage banker and a mortgage broker. Why? What does that matter? Let me give you an example. I have a past client of mine call me up about 5, 6 weeks ago. I did her mortgage 3 years ago. Very, very nice young lady. Her and her husband bought a primary home down here. She said, "Hey, Bill, I'm getting ready to go to contract on a second home slash investment property. I'm not sure if I'm going to rent it out yet up in Ocala. We're going to retire there. You did a great job for us last time. I've already talked to Rocket. I already talked to that big company with the big R, whatever, and they gave me interest rate at 7.5%, costing 2 points because it's an investment property. I'm putting 20% down. So let me price it out for you because we're a mortgage banker, Craig. We're also a broker. We have all these options. When you say we have investors, it means we have multiple options. We were able to price it out with different wholesale lenders. I priced it out at the time. I said, "Hey, we could do 7.5%. It's about a 1.5 points." She said, "Great, better deal than I'm getting with this other big company." So I got the application in, I turned it in, I repriced the loan. So we have some alternative investors. I repriced it again, and it was like 7.5% with only a half a discount point. I mean, these people saved like $6,000 in closing costs. And that's just a win-win situation. So everybody thinks, oh, I got to go online and talk to this big online lender. When you come to someone like us, we've got multiple options.
Yeah, no, it's interesting. The Fannie Mae, in the, they have these charges that get applied to every loan that you're selling to Fannie Mae based on certain criteria, credit score, occupancy type, and there's some stiff penalties in there for investment properties and second homes. The But some of the other alternative investors, which most of the time we would usually normally consider for people who have some type of an issue, they need something creative. But there are times where the particular set of circumstances is actually more favorable to the client, even though the client can qualify for any loan. It was just a pricing benefit. So yeah, I think that's pretty cool when you get a chance to kind of deliver something, maybe intended for one type of client, but it actually fits a different client even better for them. And that's part of what's the neat part about what we do is we're looking to match folks with solutions, right? So
Yeah.
that was good.
Absolutely. We're always, trying to provide great customer service, making a predictable customer service experience with great pricing, competitive costs, et cetera, et cetera. And it was definitely a win-win, especially for this client. So, and I really appreciate her coming back to us for her financing her next property. So, well, listen, I hope you have a great Thanksgiving. Hats off to you, and don't eat too much turkey. And we'll see you next Monday. We'll see you, Craig, at the closing
table after I see you at the Thanksgiving table.
So. That's right. Good idea. Say Thanksgiving table.
All right.
All right, my friend. Have a great weekend.
Hey, you too. See ya.